Traders, welcome back to my channel. In this video, we're going to go through a trading strategy that is based on price action to identify high probability setups using price action rules. Now, prior to this massive bearish spike, we had earlier price action, but this massive spike that was caused by the news is taking precedence, and this is a huge volatility spike, and this is going to dictate the bias as I'm watching this price action. Now, since this is the major bias right now, and I see prices correcting, I, for the most part, expect for prices to create new extreme for this downtrend, because this is steep trend down, but it is a downtrend at the end of the day, and I expect for prices to create new extreme for this downtrend, and there's a possibility for me to redraw uptrend. It will look something like this. It will be a little bit wider. However, I'm not going to do that just yet. Since I expect this downtrend to continue, I'm going to view this as a temporary two-legged correction. We can see we have first leg up, correction, second leg up. Now, this is how market likes to move. Corrections within the trend are going to have a form of a two-legged pullback. And if we push below EMA, that's going to indicate that the two-legged correction played out. Bullish momentum is over, and I can look for resumption of the bearish move down. So uptrend played out with the break new high. We're pushing below EMA. And at this point on, the high probability setup is going to allow me to capitalize on taking a short. In this example, is going to either be a lower high or a felt second entry long. So we can see that prices are working sideways. We have tick higher and big bearish bar reversal. So at this point on, this is a lower high compared to this high, new low, first entry short, pullback, second entry short, lower high, confirmation of this second entry short. And this right here is a first high probability setup following the price action rules. Now, as prices are working lower, we can see that we have a felt second entry long, new high, first entry long, second entry long failure. But the signal bar is bullish bar, and I want to sell below bearish bar, so I can't really go short here. And I can just see prices working lower. I'm going to just redraw another brand new short and downtrend just to keep me on the right side of the market. And I keep drawing these channels all the time just to make sure I'm following the price action correctly. And you guys can see we are far away from the exponential moving average. This is a key entry point, and the high probability setup will appear close to this key entry point. And notice what happened. This downtrend created new extreme, and also we have first leg here, second leg here. Now this second leg is much shorter, but this is still indicating two-legged correction. So at this point on, since we have new extreme form for the downtrend, we can expect, according to trendline rules, correction or possible reversal. So notice prices are working higher, so I'm going to redraw the channel, and we're pushing above exponential moving average. Okay, so at this point on, as I see break new high, I still am leaning more towards resumption of the bearish bias, because such a big massive spike caused by the news will generally have a larger follow through. So I'm not really keen on reversing the market just yet. For me, at this point when I'm watching this, the bias is still for the most part bearish, but I just need to be patient and let this bullish correction play out, because there is going to be corrections. We can see that we have a lower high, but the signal bar was bullish. This is an inside bar, quite neutral. I would prefer felt second entry long, because this downtrend had new extreme. It's a little bit too bullish, strong push above EMA, so I don't want to take it, even though it probably worked for a scalp. Not really interested. When I was watching this, I was expecting new high, first entry long, pullback, second entry long, failure. Expecting a felt second entry long, but as you can see, there is no break below this bearish bar, so no short entry triggered, and market kept reversing to the upside. Okay, so as I'm watching this and I can see EMA flattening, it's no longer pointing down. This is where I'm going to find a potential small little trading range. And since we are pushing higher, also take a look. First leg up, pullback, second leg up. And once again, since the main bias is bearish, I'm not looking for a wider uptrend. I'm sticking to the tighter one. And this is looking similar to this pattern. First legged correction, pullback, second legged correction. And you can see market keeps reversing back down. So at this point on, it is before the market open, and I expect to get possible lower high or felt second entry long, high probability setup to resume the bearish momentum. We don't have a trigger higher, so there is no lower high, and market keeps working lower. By the time you get lower high, notice you push back above EMA. You have a doji signal bar with a little bit of a bullish body. This is not a great setup for me to sell below. So at this point on, I'm just waiting patiently, and market keeps working lower and keeps working lower. So at this point, I'm just watching the market. It's a little bit too sideways, but still, this main spike dictated the bias. We keep creating lower highs consistently, so I'm just following the price action, still overall looking way too bearish, so I'm not even thinking about reversal at all at this point on. Okay, I keep withdrawing the channel, I have a break, move to new extreme, and we have new low, first attempt to sell, pull back, second attempt to sell, so another second entry short. New high has been made, but it formed above EMA. This is way too advanced. I'm going to skip it, but it is confirming the bearish bias because this was the chance by the bulls to reverse the market if they are strong and they're going to come into the market. The fact that you barely pushed above EMA and you reverse down is indicating that this bias is going to be bearish. And notice what you have. You have small little double top, uptrend played out, and you have big bearish bar. This is not particularly high probability setup per se. It is not a variation of a two-legged pullback. This is more advanced trade, but as you can see the massive bearish bar reversal, you can see the bearish bias, and you see micro double top. I took this trade myself and it resulted in a fairly decent, quick, easy scalp. But it's a little bit more advanced. There is no second entry short, but I like the context, the double top, close below EMA, and the big bearish bar. And notice prices are working higher. I had shortened channel in play. I keep withdrawing these channels because I want to stay on the right side of the market. It will prevent me to sell too quickly. Now, as I was watching this, I was expecting for this uptrend to create new high following the trend line rule. We have a lower high, push below EMA, which I didn't take. Looking back, it confirms the triple top, triple test, lower high, but this uptrend is in play. You never know if you're going to make push higher. I feel this is more aggressive. You need a failed second entry long, which never came. It's way too down here at the almost very low of the day, and the signal bar is not great, but it looked like it's going to create a massive spike down. So at this point on, I need to zoom back and reinforce the structure. Notice how strong the downtrend is starting to look, and this was the massive one spike down, and we have a two-legged pullback. So there's possibly a spike and a channel pattern. Why spike and a channel? Because since you have such a massive spike down here, you have to remember that the market cannot continue working lower steeply like that. The second leg for this spike is most likely going to be much flatter. So I was playing around with the channels, and the channel I located, the channel I liked, was a channel something like this, because I get confirmation here, and also if I copy it, I put it at the bottom. Notice it also confirms these two swings at the bottom. So this is nicely fitting downtrend. I'm going to zoom in back to most recent structure, and I'm just going to observe how the price action is reacting. Notice I have new low, first entry short, second entry short, which would be a two-legged pullback, high probability setup, but it's too far away from exponential moving average. So I'm just waiting, and notice how the structure is starting to form a lot of small bars, bad signal bars, but slowly but surely working lower. Now, if this means that I have a strong downtrend on my hands, most of these reversal attempts will fail. I'm going to withdraw the channel, and I have only first entry short. So a high probability setup would be a two-legged pullback, second entry short at the key entry point. Okay, even though you see these first entries working, and honestly, it is not a bad way to approach market once it's strong like this. It's very advanced to be taking these aggressive setups. It's always better to wait for high probability setup come to you. Notice we have micro double bottom, which resets the count. We have another first entry short. So as I'm watching this, I'm thinking to myself, okay, I may get a second entry short here because EMA keeps rejecting. I have a spike and a channel downtrend. This is a strong downtrend. I want to see second entry short, but I don't even get second entry short. Watching in hindsight, we can see we have a small little failed breakout of this small little congestion, but this feels a little bit insignificant at the time. You really want to see to like a pullback, but this is what these strong trends, will do. Just a lot of small bars, slowly but surely chopping higher. But the part of this strategy is to wait for a high probability setup, and since there's no high probability setup, I cannot really execute the setup. I'm just going to redraw the channel. Notice first entry short, and we have break new high. So you would be expecting new high, first entry long, second entry long failure below EMA. Resumption of the downtrend, but market keeps pushing higher and keeps pushing higher. Okay, so I'm just going to locate spike and a channel because we can see we spiked up and we have a continuation of the channel. So this looks like a nice spike and channel pattern. I have a break, expect new extreme, and now that we have a new extreme even for the spike and a channel, if the main bias still remains bearish, which is undeniably strong bearish structure, price action rules are telling me that high probability setups are going to be sell setups. and I only need to wait for price action to push below EMA and offer me a high probability setup to sell. So as I'm watching this, you know, nothing pretty much happening. I expect push below EMA, but the push below EMA is not coming for a long time. And notice, finally, the break of the main channel. So I'm still leaning towards prices pushing below EMA and creating failed second entry long new high, first entry long, second entry long. I expect failure, but this is complication because EMA is holding, and by the time you get failure, you're most likely not going to close below EMA. And even if you tick above this bar and close below EMA, it's going to be way too gigantic. So unfortunately, I'm already thinking that the setup may not form. Lo and behold, it formed, it worked, felt second entry long, but it is way too, you know, above EMA, quite aggressive. And notice, by the way, I'm going to talk about it a little bit. There's a possibility for you to draw this wider uptrend, which I'm not going to do because I don't want to go long, and this will prevent me looking for short setups, okay? The main bias is bearish, trend down is the larger pattern. That is the pattern that is taking precedence, and that is the pattern I'm focusing on. So I'm not looking for reasons to buy, I'm looking for reasons to sell. And notice, as I'm watching this failed second entry long above EMA, we're pushing back below EMA, confirming the bearish momentum. So the rules dictate that we're going to get new low for the downtrend because we broke it. A high probability setup is going to be, at this point on, since I missed the failed second entry long because the form of EMA, is going to be a lower high. Lower high confirmation of this failed second entry long. And notice I get the lower high confirmation of the failed second entry long. And this is another high probability setup. It pushed below EMA and market kept working lower. I get a failed second entry long after that, but the single bar is not good. And then I have another lower high. But since the lower high formed after such a massive bull bar, the single bar not that convincing, it felt a little bit sketchy. It managed to work. You can see EMA holding again, and the trend line is coming into play, which is nice confirmation. You know, not a bad setup at all. If you took it, I can see why, but it feels a little bit too aggressive after such a big bull bar, but not a bad setup by any means. Now, at this point on market keeps working lower. I'm not really a fan of taking, actually I had trend line like this, any other setup, because you just don't have a decent two-legged pullback. You want to sell high, and this is where the high probability setup will appear at the top of this channel, at the top of the correction. And notice strong push above EMA. So only after now I can see prices pushing above EMA. This is where I'm going to reassess the structure and see, okay, the channel was probably larger, and we may now retest the new high of this channel. So at this point on, it is okay for me to watch this channel, because now it makes sense that we're going to create new high for this uptrend. So I'm going to redraw, going to predict a possible support. Why am I doing this? Well, because by the time we create new high for this uptrend, we're most likely going to get some sort of failed breakout. And if we get a good short setup for second entry long below EMA, I want to sell. So I expect for prices to reach these highs. Okay, I see this uptrend played out, but we don't have a new high just yet. I don't want to sell below doji. Market keeps pushing higher. Okay, we have a little bit of failed breakout, but this is not proven yet. New high has been made. Okay, so all uptrends have a new high. So I'm just looking for reasons to sell, which is a failed second entry long below EMA, but I don't get it. I have massive push down below EMA and I get lower high, but it is too far from EMA, and I wouldn't not have taken lower high anyway. I want to see reversal pattern. Okay, prices are pushing back above EMA, so I have to concede here. This means that the correction is going to be longer. Okay, if I'm going to zoom out like this, can I draw a pattern like this? This is very tempting for a lot of beginner traders. This is not the way I'm approaching the structure, but the price action rules are telling me that the bigger pattern will take precedence. And since the bigger pattern will take precedence, this downtrend still needs to get new low. Uptrend played out with the breaking new high. All uptrends have new low. It doesn't matter that the correction is going to take longer. That can happen sometimes. I still expect new low for this downtrend, and I expect for prices to create failed second entry long. Okay, so we can see that the prices, let me just zoom in, just going sideways. I'm not really feeling too confident about picking top, because this is not a healthy trading range. We have high lows, some resistance here. I just really need to see the reversal pattern. I don't get no reversal pattern. Okay, we're finally pushing lower as expected. Can we get some setup? We have new high, first entry long, second entry long, a new low, first entry short, second entry short. So finally a high probability setup, but notice the signal bar. This is context wise great setup. Second entry short and a failed second entry long, but the signal bar is bullish, neutral. I can't really take this signal bar, unfortunately. If you have better signal bar on your chart, you can definitely sell here, high probability setup, but I can't really sell below the signal bar, even though context is so good. And notice what you have. You have new high here, first entry long, pullback, second entry long, count reset, tick higher, reversal down. You have another failed second entry long. EMA keeps holding. You still expect new low for the downtrend. You expect new low even for this downtrend. You're coming off this resistance. You really expect new low, decent high probability setup, and market keeps working lower and keeps, okay, market keeps pushing lower strongly. Since I expect the new low for the downtrend, I'm just going to redraw this channel a little bit wider because the main bias is bearish. That's taking precedence. So I'm not really worried that this downtrend already played out. Most likely this downtrend didn't play out because I'm going to get new extreme. So the price action keeps working. Okay, I'm going to redraw the channel here. Only first entry short, I'm not interested. We're too far down. Second entry short above EMA doji, even if it triggers, not interested. Bearish bar, bullish bar still above EMA, not interested in shorting. Only thing I'm expecting is to get lower high below EMA. Okay, massive push below EMA, nice. Okay, nice. Okay, one tick high, reversal down. Okay, if this triggers, I'm about to sell. Because this is now going to be a lower high confirmation of, well, it doesn't really confirm much. But as it has a break here, I expect new low for this downtrend, new low here. And basically the bias at this point on is so strong bearish that I'm just looking for reasons to sell. But you can see there is no trigger below this signal bar, so I cannot take this setup. Okay, maybe we get a lower high here. I was preparing my limit order, it tick high, reversal down, big bearish bar. Maybe I get lower high here, but I stalled and it formed bullish bar inside of it. So no trigger here again. I have to cancel. It ended up working, but I can't really take it. And now notice, new high, first entry long, pullback, second entry long, failure, and new low, first entry short, pullback, second entry short if it triggers. Now this is very tempting setup, but notice it formed a wedge pattern. This is congestion, EMA flat. Now context wise, you expect new low for all downtrends following the price action rules. It is a high probability setup, and notice how many bulls are going to get trapped going long after this big bullish bar. Playing the wider uptrend, you can always capitalize on traps while the bulls are playing wider uptrend. But this is too stacked. I really don't like it. You know, makes sense. I will mark it, even though personally I really don't like these wedges. This is one of those trades where you feel it will work, but the flat EMA congestion, personally I would skip. But I can definitely see why an advanced trader or more aggressive trader would take it, because trading is about probabilities. You're taking a chance, and it is not a bad setup. The signal bar is great to take a chance. It's just too wedgy and too stacked for my liking. Now you have a break new low. You have another setup here, but notice you're so far away from EMA, especially with the body. You're too far down. You can't enter lower high here. There's a big gap between this bar here and the body here. EMA tail trap, possibly similar behaviors. Not interested. And I have a new low for this downtrend anyway, so I'm not interested in selling. The bar is too big here. I'm just waiting to see. Okay, I have new low here. At this point on, I can see continuation of lower highs, lower lows. So I'm going to redraw kind of like an additional channel and see if it fits. Okay, this fits fairly nicely. Just going to zoom out. Okay, the new low still has yet to be reached for the main channel. So let's go back and analyze the structure again. So what are the rules telling me? Okay, the bias is bearish, yes. The strong bearish. The downtrend needs to get new extreme, yes, the main one. This one right here. Even this downtrend is right now coming into play because it got confirmed here. So once again, I'm just looking for high probability setups to sell. So let me just see what happens. We have a short-term uptrend, break, move to a new high, and we have new low, first entry short, pullback, second entry short. We have triple test. I took this trade myself as a second entry short. I took it as a larger two-leg pullback. It is definitely more advanced. Notice first leg up, second leg up, visual two-leg pullback. It worked for a scalp, but you can see market ended up pushing higher. Now, after prices didn't push lower and you have such a massive bullish reversal, you cannot take the short anymore. Okay, this is not what's supposed to happen. You're supposed to push lower. The fact that you get this setup here, you have massive bullish push, there's smaller support. I can't take it. If anything, I'm going to redraw the support again. I have a break. Excuse me. I'm going to redraw the uptrend. I have a break. New high. Okay, the uptrend played out according to rules. strong push below EMA. So at this point on, once I'm watching this, I'm still combining the main bias. I even have resistance here. This massive push above EMA is very strong, big bull bar, and I have a nice lower high confirmation of this fell breakout. So this is a high probability setup, lower high confirmation setup, tick higher, reverse down. You have room to these lows. You can take smaller scalp if you want to have room to these supports, but the main bias remains bearish. All downtrends need to have new extreme, and this is a great high probability setup. So if I'm going to zoom back, let me see if we just made new low. Yes, the new low for the downtrend was made, but remember, this is a strong downtrend, so we may continue pushing lower and lower strongly. So let me just see what the price action is going to do. And we are indeed pushing lower and lower quite strongly, but we're not closing to EMA. I can't really take it. And notice, and this is right now confirming the spike and a channel pattern. So I have a spike and a channel. It means that the bias still remains strong bearish. This is quite typical during a strong downtrend. You may keep creating multiple new extremes up to new extremes. I'm going to redraw the short-term uptrend. I have a new low, first entry short, second entry short, but there is no signal bar. Uptrend is new high, horrible doji, bullish stems, no entry, even though it worked. Okay, so the bias resumes. I'm still waiting for high probability setup to sell, two-leg pullback, second entry short at the key entry point. I'm redrawing the channel. Okay, and notice, strong push above EMA. So that means I have to follow the short-term uptrend because there are going to be corrections. So I have a new high, I have first entry long failure, and I can get a failed second entry long. Now here lies the question. If the failed second entry long forms, is it good? Well, there are a couple of factors that go against it. I can see that the downtrend played out with a breaking new high, and generally failed second entry long should form within one move, not two separate legs like that. And this uptrend is new high, so there is a high chance the market will create new high. But since the bias is so bearish, if it ticks higher and reverses down, we can take it. But it never ticked higher, never reversed down, and market indeed created new extreme. So now that this uptrend has new high, and you have first leg up, pullback, second leg up, at this point on, I expect the same thing I expected here. Failed second entry long. I have new high, first entry long, push below EMA, okay, second entry long failure. Notice the signal bar, neutral doji, but I am going to mark it because context is so good. You can definitely be patient here and wait because the signal bar is bad. But if you want to bet on the context, on a failed second entry long, because uptrend played out with the breaking new high, indicating to you that the buyers are over. Main bias remains bearish. This spike and channel is new low, high probability setup. Then you have new low, you have first entry short. You have micro doubled bottom, which has to reset the count. If there is no micro double bottom, this would be higher low. This would have been a great second entry short because it went sideways, created new high, and such a nice bearish bar. This downtrend is new low. All downtrends need new low. EMA kept holding. Too bad this is just a first entry short. Had this been a second entry short, it would have been a great high probability setup. And you can see what it resulted into. And notice, by the way, if I'm going to zoom out, notice how strongly we keep working lower. So this tells me that there is possibly, another wide downtrend. Okay, because you just keep pushing lower so many times, the bias remains bearish. If the trend down is strong, you're probably going to keep recreating new extremes. So we have uptrend working higher, no real setup, only first entry short. I'm waiting for prices to go to EMA. I'm just letting the prices go. Okay, we have another uptrend, first entry short, pullback, second entry short. I'm not going to take it. Why? Because short-term uptrend is in play. It quite formed above EMA, but notice what you have now. When I'm watching this, I'm thinking that lower high might be a good setup here, because you have right now what looks like to be a failed second entry short above EMA, which may trap a lot of early bulls going long. So notice it take one tick higher, reverse down, big bearish bar, high probability setup, another lower high, confirming this second entry short. Okay, we don't want to take the second entry short just yet. If the second entry short is not good because short-term channel is in play, or the signal bar is bad, or the form of EMA, additional confirmation from the market is going to be a lower high. So we have a second entry short here, tick high, reverse it down, a lower high, confirmation setup, and market continues working low. Okay, and why is in this instance okay not to get new high? And let's say here, because at this point when I'm watching this, I don't want to take this entry. I have new low, first entry short, second entry short. Why do I want to take it? Because uptrend doesn't have new high, but I can say the same thing here. But here's the different thing. Here you pushed above EMA and you have felt second entry short above EMA. So the buyers are gonna get trapped and lower high is good enough just as an attempt. Okay, but here I have no bulls trapped. Here, in fact, the sellers are gonna get trapped. So there's a difference. There's just one leg. It's just the move up is starting and I can have a second leg. But here I have already first leg, pull back, second leg. I already pushed above EMA and close outside. Bulls are going to get trapped. So different structure here because I just have one bullish leg and I don't have first second entry short, and different structure here. So it is okay for me to sell here, not this second entry short. And I don't want to sell here anyway. Why? Because we're suddenly going sideways. The trend is losing steam. And this is typical how the trap may form. You can also see these highs are working sideways. So you may have a potential trend line, but I don't like shorting here. Flat EMA in all these bars, and more importantly, you form a double bottom, you're not creating new low. So once you see, this is typical how the trend will lose steam. Is a little bit more advanced, even though, no, I don't think it worked for a scalp, but you don't want to take it anyway. In fact, market keeps working hard. Yeah, when my trend line is jacked up. This is the channel. This is the channel. Prices are working lower. Channel is getting confirmed. You have push below EMA, lower high, bad signal bar, doji again. You want to felt second entry long, and you never get felt second entry. And I think this is too late for any price action. Yeah, the market actually closed here. So before we sign off, I just want to quickly go through the day and recap it. And by the way, if you're watching at this point very late, you're probably enjoying the content. You're watching the entire video, so like the video if you're enjoying the content. Notice there are two-legged pullbacks all over the place. This will indicate end of the correction and resumption of the trend. And high probability setups, notice they are always forming at the highs of these moves. And that's the goal of price action. The goal is to find points where prices will resume the main downtrend. And notice all these high probability setups, you're selling high. And that's the goal. You always want to wait for the correction to play out and sell high. That's where all the runners are going to be generated. That's where all the high probability setups are going to be forming. This is where all the smart traders and institutions are selling. Now, quickly, I want to mention difference between lower highs, because I received question when it is okay to wait for a lower high and felt second entry long. Let's talk about this scenario. I'm not expecting to take lower high here. Why? Because it is unclear. We have uptrend break new high, yes, but I still have series of higher lows and I just cannot predict how many pushes higher you're going to make. When I see structure like this, where the bullish momentum is still quite strong, I still need to wait for reversal pattern for felt second entry long, just like we had here. But let's say I'm watching structure like this. I'm just going to zoom out. Here, it is okay for me to take a lower high. Why? Because all downtrends need new low. Now we push strongly below EMA, and notice the uptrend is tiny. So every single time you see tiny uptrend inside of a bigger channel, and it played out with the break and new high. I'm just going to quickly delete it. And it played out with the break and new high, it makes sense to take lower high, okay? Because the uptrend didn't go too far. It is a trading range structure, push below EMA, resistance is holding, so the structure is different here. Here, you have higher lows, so the bullish momentum is much stronger, and the structure is unclear. And when the structure is unclear, I expect felt second entry long, but here, structure is not unclear. The structure is still strong, bearish bias, all downtrend is new low, uptrend quickly played out with the break new high, first leg up, pull back, second leg up, and such a massive push below EMA. There's nothing much to complicate. The bullish momentum is not going to be strong, so it is okay for me to take a lower high here, but not here. So just a little reminder when it comes to the cleanness of the bias. But I'm going to wrap it up, and I'm going to see you guys in the next one. Take care, everybody.